Go again. Me need a part of the question.
Which part?
Just forwarding. I mean.
No problem. Sorry about that. Yes. So what may I say is the high frequency volatility index is more geared towards like the GJ trader them now. You see me? Because a small move on a high frequency 100 can give you like a good return off a minimum lot size, right? So the minimum lot size you can place on the high frequency one is 0.10 lots, and it's pretty straightforward. See? So if you have a 0.01 lot size here, bam, hold on. Zero saying can't come in. Oh, God. Zero get left behind. Oh, all right, cool. All right, him arrive. All right, cool. So what I say now, so high frequency volatility index come like GJ, right? Small movements on this would give you good returns, and it move fast. Like let me see, regular 100 would have be like Euro USD, right? It's slow sometime, but when it start move, see? And then high frequency 100 would have be like GJ, like you know what I'm saying? Always I do something. And if it now do something, in the next couple of days or so, it's gonna be doing a lot. You see what I'm saying? So, so the risk management criteria for this is slightly different. So for high frequency volatility index 100, I would use like a risk to reward of 1 to 8 or 1 to 10, and the stop loss would be between 100 to 150 pips, depending on which time frame like I enter on, right? And the target would be 1,000 and 1,000 to 1,500 pips, right? So this is the 4 hour time frame, and this is what the setups would look like, right? So this one is 150 pip with 1,000 pip take profit, and this one is the 1,500 pip take profit with the 150 pip stop loss, and this is the 4 hour. So yeah, I mean, imagine dialing down to like the 1 hour, identifying your levels and placing a trade. All right, look, see that? But watch it now. Draw fee fib tool, right? Boom. right on the 705 fib. It's like this is like a blessing for us technical traders, right? And I mean, we couldn't wait. We couldn't wait to share this with them because, but really and truly, we have to test it first. We have to really back test it and make sure say how certain things work with it before we can control it on it. Because I mean, it can really make or break it, right? But yeah, this look at this entry. So we identified this price floor on the 4 hours a major level, and we had a few interactions, right? Price gave us the doji and it departed from it. See? We broke the ceiling right here, departed from it, created a new high. We stretched with fibs, bam bam, 705 fib line out perfect, and it just drive, it just push, and from it push. You know what I'm saying? Imagine you enter with a high lattice and you just put in a stop loss right up yourself and just let it ride, you know what I mean? Just watch the money just come in. And I mean, there are entry opportunities available to you on the lower time frame to see if we can max out some of them lower time frame entries there, right? Yeah, a possible one, right? So naturally. Now, when you come on to like supply and demand bases and supply and demand zones and volatility index don't in my experience, my backtesting experience, it don't really do supply and demand basis and supply and demand zones as much. What I realize it does is it's mainly pure price action, market mechanics like impulse retracement, and floors and ceilings, and then the moving average is what would be using to analyze these pairs. So you'd have a ceiling here, and the ceiling was broken naturally, and then it was retested over here. Can come so, boom, set your limit, the 100 pip stop. You set your 1000 pip target and go on your bed, go on a work, go on the road, go on market, do what you need to do, I don't care. All of that stuff. Then the same thing what me I said all throughout, you know, right? You see, once this pair decide in direction, him just a go shoot, you know. Him nah go give you no like false signal or whatever. Him just a go shoot. He's a straight shooter. You see me? And that's why I'm saying it's like a technical trader's dream. You know what I mean? Watch it now. Next year, yes. You see? Right, that ceiling right so. Ceiling turn on, be a floor. Right, ceiling turn on, be a floor. We can trade from this level. Bam. 100 pips. This is a 1 hour time frame, so we at the 30-minute time frame, so we can have a smaller stop loss of 100 pips. So with a minimum lot size of 0.01, and you would be risking $10 for this trade, right? If you do 1 to 10 and you aim for the 1,000, right, look at 1,000 pips there. This are easily $100. Easy, yeah, risk $10 to get $100 in return. Look at that. That's simple maths right there. Imagine if you risk $100. You risk $100, you get all 1,000 in return. Simple movements. You know what I mean? Imagine if you stretch it up to 150 pips. Just like that. You know what I say? What you know? Say you miss this a sniper entry, right? Or whatever. You see price left off. You can come to draw up your fibs. Low to your high. Get another entry for the 705 fib again. Simple maths, people. Simple maths. You know what I mean? Simple maths. No rocket science to this. Pure price action trading. I mean, if this don't get me excited, you know what will get me excited now? All of the knowledge and experience we want to have in trading and whatever, and the market kicking out on a trade and XYZ in a forex and tired of stressing out and miss entries and all that type of shit. This I wanna know. This come for redeem. All of that. You see me I say? If you risk $10 for this, you know, $150 you get back off of this. You know I say? See what I'm saying? So
Yeah, man.
and then alright, another thing now when it come on to this pair, when it come on to remember I say yo, you have to trade with the trend, right? Because if it identify the trend as bullish, it not gonna stop being bullish until major market structure is broken. You see me? So this right also would have been like the last real, like the 4 hour lower high, right? Right also, as you can see, because of the interaction right also, right also, and then the two interaction actually, two interactions, the break and the retest. So really this and truly this would act as the 4 hour price floor, right? Price never come, price never come all the way back down to this a floor, yeah. But if you go down to the 15 minute, um, it's is Kamai here? Is Kamai here? I don't know if Kamai is here. Kamai, if you're here, say you're here. Alright. This remember this is the 4 hour level, right? But price created a subsequent price floor here. Right? So we see that now. Remember I tell us you disappear and you know funny business, you know, saying the fake out and thing, right? So we can reasonably expect say I wouldn't be taking a buy off of this just yet, you know. Right? Even though we see the 4 interaction, maybe me that does because essentially we'd be trading against market flow here. But remember, say on the higher time frame, the overall trend is bullish. So if you have a 4 hour level here, you can probably take a trade at someone and risk it. So if you have 100 pips, what do I carry below the actual level? So that would be like a good entry. But I think this was the first time I started to trade it, right? I made enter here, so I think we did enter somewhere over here, so and then price it eventually take me out. Take me out at break even. Yeah man, I see him man. Price take me out at break even. Oh, the link to the broker, sorry. Hold on. How that there again? I'm gonna send it in the URL should have good. You can get it from there. Where is it? Copy. Yeah, so remember that you sign up for a DMT5 account, Deriv MetaTrader 5 account. That's what we're going to use. Alright. Alright, so what you know? So as me I say, I was taking out here. But I say trust the fib tool. You see you had a range here, right? You had a price ceiling here, obviously, because you had a lot of rejection around this here, all right? Yeah, see that. We see that. We see price broke this ceiling, and in doing so, it created a new high, right? So with the first evidence, the price want to push higher. So as me say, this does pure market movement. It's pure price action. See? So you come see you draw your fib from your low to your high, right? Come by your 705 fib. You enter the limit. So me I say, do your 100 pip stop loss, 100 pip stop loss, and then you can do your 1000 pip target. So me I say, easy. 1, 2, 3. Yeah, Charlene, it sound too good to be true, you know. I swear to God, it sound good to be true. Like me, I get too excited for this. Too excited. Right? So there you go. Easy 1, 2, 3. You know what I'm saying? Let's see. And then even if you miss this entry opportunity, a whole heap of other entries there so if you get in for the lower time frame. I mean no know how to trade already. So me I say all I have to do is really just apply the technical skills one already have. And I mean the unnecessary fundamentals were usually corrupt with it not there so. You see me? In a day or so. So all I know I trade indices or whatever because of the hype. Yo, this better than the indices, you see me I say? And you don't need a big account for trade them. If you just have the technical skills then you can trade sharp and precise, you can use like a $200, you can turn that in a 1,000 simple one too. All off a one trade. See me I say, Andre, say another channel,
You.
channel. As me I say, then we come every now and then, you see me?
Yeah.
We come every now and then. So you have a breakout of the channel and you have a retest right there, so and then price continue going up further, you see me? So you have them, man, you have them in there. So yeah, as me I say, this is it. I already build up a strategy feed. So I can send that to you and then let me see how it's there. Alright.
Bro, yeah, record this.
Yeah man, I record it man. Alright. See ya. So it's set up the same way as the original trading plan, right? But in this I use pure price action trading. Yeah, see the one note, right?
Dog.
But you see it. You see the screen?
Yeah, I see it.
Okay, alright. So yeah, basically
Yeah, we see the screen.
see it's same thing like our original trading plan, right? But with just the minor tweaks to the strategy. So as me say, when it come out to VIX 100 and high frequency VIX 100, you always want to trade with the trend because it always going to continue. So I say, if you take retracement trade from this, man, go find, you know, and then go conquer, you know. You see me? Don't do it.
Wording.
That's the fastest way for
Yo,
you. Yeah.
the writing kind of small still. See if you can zoom it up a bit there.
Yes, ma'am. Yes, you know.
Yeah.
All right, cool. So you have to determine the trend, right? Is price and the impulse or retracement leg. I mean, it's basically everything I'm going to start about already. So we are going to determine the trend, bullish, bearish, whatever, right? We're going to look at the chart. If price is above the 65 EMA, obviously, you know, so we're going to look for buying opportunities, right? You know, regular me, I tell you to label your chart, but because it's not the standard trading view, it might be difficult, you see me? But yeah, just even if you have to write it down on a piece of paper, if you say, yo, V100, bullish. Just a reminder, say, oh, I buy I look for, right? Always check with the 65 EMA first, right? Then the next thing is, I say it move as pure price action. So the first thing you want to determine is price on an impulse or a retracement leg, right? If it's on the impulse leg, you wait for a retracement. See, never you trade against the trend. That is the most important thing, right? If price made a new valid structure point, look for entries around the 705 with retracement, which stops above the previous structure point, right? So basically, is what we just talked about over here. So, right there, right again, so right there, so. So price make a valid higher right there, so, and then we wait for the retracement back down to the 705 fib, and then we just enter right there. See? That's how you enter using impulse and retracement, right? And I remember telling you, say, yo, if price is at you don't know about floors and ceilings, right? But for this one, it's unique. So if is price at a floor or a ceiling, you wait for a rejection and then a second touch. Like second touch is very important when it comes to this. And you buy floors in bullish market floor and sell ceilings in bearish market floor. We know that. So it's like R100. R100 when you come out to the floor, right? First touch, second touch, we could enter from here. You may say enter from a third touch as well, or a fourth touch. As long as you have multiple touches on the floor and all of the touches getting respected, then 1, 2, 3 touches. You may say never enter upon just one touch alone or two touch. 3 touch, more 4 touch, yes, but never just by one touch alone. You know about the 65 EMA already? Oh, I mean, I use the stochastic and the RSI, but me kinda want to delete this. Which one? Which one, Marcus? The trend?
The first one, bro, the 65 MA, the
Yeah.
link, so I don't know how you work that part there. Like, if you use the indicator there.
Oh, the 65 EMA. Simple strips,
Yeah,
man. Simple strips.
yeah.
Alright, so this is how would I use the EMA, right? So 65 EMA would I observe the EMA upon the 30 minute and the 1 hour, right? To determine a trend. If you give us a confirmation of the trend. We know we are gonna know the trend based on the structure and the 4 hour high, low, XYZ. But I mean, if you're not good with the market structure, you can use the 65 EMA as a good judgment, right? So if price is above the 65 EMA, then you look for buys. If it is
So how I read it?
below,
That's what I mean. Like, how I read it.
yeah, I'm gonna show you, man. So, all right, so we observe it on the 30 minutes and the 1 hour, right? So 65, we show it right there. So, all right, so if you never get in with the price action down, that's saying you can wait for further confirmation. You can wait till the price start trade above it. Over here, so you see
Yeah.
me? We take trades,
Bro.
right? But as me in the notes, what me say is price action takes precedent, right? So you're not gonna trade bounces off of the 65 EMA, you know, you're not gonna do that. You're gonna just use the EMA if you confirm the direction of the market. You know what I'm saying? So you're not gonna look for take touches off of it, or I
So
mean,
price above it, you know,
as
so yeah.
long as price is above it, you know, say, oh yeah, you have a higher chance of price moving up than going down, right? No, same thing happen right there. So you see how transition happened from bullish to bearish here. So I mean the 65 EMA was acting as a support level for the price and the 1 hour, and then it eventually broke through. Right?
Yeah.
So you know that selling would start from here, from the break of this level here. But the 30 minute now, you would already have evidence. Say price won't go lower. Right? Because you already have the break occur right there, so and then you have a retest of the 65 EMA, yeah, so confirming downward movement and then the break at this level. So you have like 3 confirmation, yeah, so
Yeah, man, me get it, man.
and then you see how price come back now and touch right there, so again, and then start move back down.
Different fib setup.
Now man, it's the same exact fib setup I used to use, I'm use for forex. Isn't it?
You don't know that setup, listen. She not too she use the fib.
That's that me I say I don't really use it either. You see me? Let's see. What made it there? So that's a 65 EMA. So the stochastic and the RSI, like I've been getting lots of false signals with this, so I'm not really I rely upon this anymore. Right? I'm not really rely upon this anymore. I really rely upon it. MACD, no. We'll get to that soon. All right. So yeah, MACD, actually we're getting to there right now. Now, the way how the MACD look on Trading View and MetaTrader, I mean I understand it. You see me? So we use the MACD off of the trading platform from the Riv. That's it. So this is how it looks. I mean, at first it not gonna look like this at first. It's gonna look like binary options at first. You see me? And you don't want that because it will confuse you. Right? Yeah, you are with me right now? Because these are the most important part, you know.
Yeah, man.
Alright, cool. Alright. So I don't know if you know how the MACD indicator work, right? The MACD indicator is like a momentum indicator, and it's like a leading indicator, so it can give you a good signal of where, or it can be a good confirmation signal that price is about to move in your direction, right? Now the way how this works is, so you have a line, right? You have the line which is the white line. They call it the main line, right? And then the red line is the signal line. So when the main line crosses below the signal line, then it's a good indication that sales are going to start, right? And then vice versa, when the white line or the main line crosses above the signal line, it's a good indication that price is going to move upwards, right? But if you have the cross down below the zero line, it's a good indication that price is going to move up. And if you have a cross at the top of the zero line, it's a good indication that price is going to move down. This might take you some more practice. If this, I don't even know how much minutes gone on this one. How much minutes gone on this this recording? Or this one? I don't want to cut off halfway. I don't even know. Anyways, yeah. So let's say we identify our levels already, right? We are playing from this here, right? So because this is what? This is high frequency 100, right? This is high frequency, right? So high frequency. Same thing what we just talk about markets, see? So we just we look how the MACD are going to assist with in taking trades, right?
Yeah.
So on the 4 hour, right? We realize that price is at a major level from over here. Right, so as me say, major levels are APSs, so you expect a break or a bounce. But obviously get a nice bounce off of this level, right? With a vengeance too, as you can see. Right? Then we come to a level where we're getting like a form of head and shoulder pattern, right? Now price is ranging in this area on the 30 minutes, right? So let me show you how you would take an entry from here. Price is ranging here. And you wonder because at this point, price is still bullish, because this is the last floor that was holding up the market. Right? Right, that's so. So you if you don't want to trade against the trend, you wonder if you fit take a buy from this level or take a sell from this level. Obviously, we already broke another price floor up here. We broke another price floor right there. So transition start long time. You see me? So this is the 30 minute over here. So this is the markup. So how may I do it on this one now? Oh, so I have 10 minutes left. Cool. That's enough time. So on this chart now, which is the trading view chart, you see this area here, which is the consolidation area, right? All right, so forget the entries using the MACD. You can look for it. We can look for the crosses on the 5, 15 minute, the 5 minute and the 15 minute, right? So this is the same area that we were talking about. So we created this ceiling here, and you can see you have a little crossover right there, so right. So you can take a trade from this level, and you can take it again here when you have the second crossover and price moving down. This is on the 15 minute. Go see, look on the 5 minutes. 5 minute too noisy. Let's say look on the 15 minutes. I only use this platform here just to see the MACD crossover, but me do the regular markups and the trading view chart, right? So yeah, you see how the signal is all the way above the zero line, which is right here. You have a crossover here. So this is a good indication that sells are coming in here, right here. A crossover here is a good idea that you can sell. I mean, you could drop your fib. Actually, I did drop my fibs and I had like a retracement somewhere up here. But then this range of consolidation kind of throw me off. So as I say, price it backs up itself in so. So right at this cross now, right so you could start selling again at this cross, and price just keep going down, 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 down. And you remember me say when price deciding direction, from him deciding direction, him gone, you know, come back, So like this now, if you all miss all of them at entry up, so you'd have to go down on the lower time frames to try to get entries. I mean, So I mean that's pretty much it, you know. That's pretty much it. Y'all already have the technical knowledge to trade this. You know what I mean? So it's just my job to introduce it, and then we don't already set the guidelines, the strategies, how to trade it. I mean, on can back test the strategy for yourself, you know what I'm saying, and see if it work or not. But may I say, I mean, for us technical traders, this is probably the best thing since sliced bread. So I'm saying. So yeah. Y'all have any questions or anything?
Yeah. Me have one, bro. Trading view this you find the chart, the
Yeah.
thing from the
You know,
pre.
it's not on the original trading view, so it's on the website. So once you sign up for the account, you're going to go to resource. You're going to go to the resources section, and then you're going
I
to
think
see,
they send me.
and then you're going to see the trading view chart, and then you can just save that. But this don't operate the same as the regular trading view. You know? Like this now, you see once this close out, all of the markings them gone.
Yeah, for mark over.
You have to mark over.
Brother, come on, gonna put paper on
So what me do is like if me mark up a trade and I say, all right, I look for take this so. Me just take a picture of it and me send it to one Telegram channel what me have with VIX setups. So if me come back on the chart now, me can just look back on what me did have the last time. You understand?
Yeah. And the fib now, show me you draw the fib again from.
So the fib
Like
would
if trade continuation.
yeah, alright. So you know, so the fibs it go with market structure. So if you see price creating higher highs, higher lows, lower lows, lower highs, you're going to enjoy it from the last low to the new high in bullish market flow. And all right, so look. So this is the area that we were talking about before. And we had this ceiling over here. Price broke through the ceiling, right? Created this new high. So this was the low. So we draw a fib from the low to the new high. And then we try to enter on the 705 fib. That's why I try to enter on. Sometimes you will get retracements to the 61.8, but I prefer when it comes to the 705 because when it comes to the 705, if you have 150 pip stop loss, 150 pip stop loss, I mean, that's 150 pip. This is 100, so 100 pip stop loss at $10, that you're good. It's massive. Let's see. I mean, I wouldn't really consider this a new high, so this would be a new high. Same thing with this one again, right? Look. So this is the last lower high. This is the last low to give us this new high. So you draw it from this one to this one. Can enter on the 705 fib again. But you want to wait for the interaction at that level, man. You want to see a rejection or something. You know, just want to blindly enter the trade. See? Because may I say, if you enter a trade and you enter in a wrong direction, you're gonna get burned without a doubt. So you have to know exactly where the market are go first. See me? Another area you can use fibs, you can do it from this.
But sit down and watch over record the video them still. So
You see, you can do it from this low to this high, another 705 fib entry right here. You see what I'm saying?
if I ask some what on there what for test down there while I
Some
go
people dumb still.
You can take one from right to say again.
Some people are
So
still.
I send the strategy, man. Like the strategy is what I've been back testing. So yo, I eat that.
Hey, I got a question.
Yeah, man. Go ahead, trade.
You in your notes,
Mm-hmm.
you don't have the time frame you begin on to do your analysis.
Same thing
Because
where we
you
come
said
from forex, man. You start on the higher time frame. You look for
from the
the
daily,
the
because I didn't see
daily.
going daily.
I mean, for the daily time frame, let me tell you, the daily time frame have some gaps. I don't know why it has gaps, and it's a 24/7 market. See? You
So
see
you
that?
recommend that before.
I recommend the 8 hour time frame. 8 hour time frame. Don't have any gaps, and it show you the real levels. So this would be the last. I would call this the daily high low. I mean lower high. So this would be the zone. So I would say the 8-hour. So not the daily, because the daily gives you the gaps. So just use the 8-hour to find the major zones or the major levels. See?
All right, cool. Yeah, thanks.
Yeah,
Put down the note.
yeah, man. You can put that in there. So it's like 2 minutes left before this chip.
Question, Maji.
Yeah, man.
The river, the broker,
Yeah, Deriv is the broker.
it regulated.
I don't know. They got
I
it.
know.
Alright,
Risky farm.
watch it now. Me I go stop this one and then me I go start the next one and then we can have all of the questions in that one. See?
Yeah, man.
Alright, cool.